this computer. Welcome everybody to a Monday night edition of just a live special for you guys. So I'm going to go over the BBR strategy. Sorry, I was just letting more people in. BBR strategy, one strategy to roll them all, one strategy to find them, one strategy to bring them all and in the money, bind them. All right. So BBR, what does that stand for? It stands for bounce, break, and reject, right? So when we're looking at stocks, we have to understand that stocks only do three things. Every single day, stocks only do these three things, right? They will bounce on support, reject resistance, and they will either break through support or they will break through resistance. That's it, right? You don't need to complicate trading, right? It's very, very simple in this aspect, right? It will only ever do these three things. So simplify trading, make it easy. All right, levels to mark. So everybody, you guys can pull up whatever you use for charting right now, whatever, software you use, whether it's as TradingView, TOS, TrendSpider. I highly recommend everybody to pull those up right now for you, right? So pull those up. I'll give it about a minute so you guys can pull those up. But every single day we need to mark these levels, right? Understand where the pre-market high is, understand where the pre-market low is, and previous days high and previous days low, right? These are going to be your major levels to know. You could also do opening print as well. So that's going to be the opening price that the stock opens up at, is another major level that you guys can play off of. But the ones, especially for this strategy, is going to be the pre-market high, pre-market low, previous day high, previous day low, and then any intraday big support / resistances, and you'll find those on the 5-minute, right? You'll find them on the 5-minute, right? So pretty much, why do we look at these? Why do we mark these levels? Well, a big thing is if we are above pre-market high, right? It's showing that there's a high probability we will head higher, right? So, pre-market high, say it comes down a little bit. If we're intraday going above that and holding that as a support, right? It shows that this level, is now a major support. So we're probably going to head higher. If we keep rejecting it, and we're probably going to head lower. But if we break through that resistance, we're going to head higher, right? And now if we're above pre-market high, and if we're above yesterday's high, this is showing you momentum, right? So it's showing you that the trend is up, right? It's clearly that the trend is up. And that's something that we saw today, right? We were above Friday's high, and then we came above today's high, pre-market high, right? So that's showing you that we have a nice trend up. And likewise, we could use this method for pre-market lows and yesterday's lows, right? So if we go below and hold below pre-market low, right, we're probably going to head lower. And now if we add pre-market low and yesterday's low together, pretty big high probability we're going to keep heading lower, right? And any intraday support and resistance levels can act the same as above. And so we'll get into that next. So how to use them. So if you have your chart up right now, I highly recommend putting these EMAs on your chart, right? So put the 8 EMA, the 13, the 48, and the 200. You could also use the 200 SMA, but have these on your chart, right? So I'll give it a minute. Get your charts up, whatever you use for charting, put the 8 on, the 13 on, 48, and the 200 on, right? So how do we use these moving averages, right? So the 200 shows long-term trend, right? If we're above the 200 MA, that's pretty bullish. If we're below the 200, that is bearish. I think this is one of the biggest things you learn, or one of the first things you learn when you start trading is that 200, right? The 200 and the 50 MA, especially on the daily, the weekly. We understand that 200 is a big, big level. It's a big, big moving average. So, If we're above it, it's bullish. If we're below it, it's bearish. And that goes for this strategy. It goes for the smaller time frames, right? It still applies to the smaller time frames. Let me admit these people real quick. And then we use the 13 and 48 EMA cross, right? So I first learned about this cross in 2015 from Yahoo Finance, right? It had an article out, and I'll show you guys that. They called it the golden cross. We know the 5200 is the golden cross, but they called the 1348, it's actually the 48.5 as the golden cross, right? And why did they call it this? Because they found that this was a high probability setup. They saw that it actually gained the most when the 13 crossed the 48. So this 1348 cross has been around for a very long time. It has a proven track record. But we're using it not in just a way of, oh, it crosses, we're just going to take an entry, right? We're using a couple different things, confluences together to take the trade. And in this way, in this strategy, we're using the 13 and 48 as kind of the levels, right? The bounce levels or the reject levels. So the 13 is going to be the first area of defense, right? That's going to be your first level to either take a bounce off of or a reject off of. So again, going back to that 200, if we're above it, right, we're looking for a pullback. If we're grabbing that pullback, we're looking for the 13 to hold. Now, if the 13 doesn't hold, our last line of defense is the 48, right? So I'll give you guys an example of this on the chart a little bit later. And likewise on the short level, right, if we're below that 200, right, so that's bearish. We're looking for that 13 for coming up, that 13 to take a reject, right? That's our level to reject. And the 48 will be our last line of defense to take to reject, right? Pullbacks, if above 200 buy, short if it's below. And so I just talked about how the 200 is important. And then we have the 8, right? So you guys can either have learned about the 8 EMA or you've learned about the 9 EMA. Both are absolutely great trend indicators, right? So trend is your friend. So once we're in the trade, we now look at the 8 EMA to hold our trend, right? So you could use the 9, pretty much the same line, but I prefer the 8, right? I prefer the 8. And when we get into a trade, we can now look to the 5, but I prefer the 15 to hold that trend. And I'll show you that today, why the 15 is a little bit better. It shows the trend a little bit better. I'll keep you in the trade longer. The 5, the trend can dip below the 8 and you could sell, right? But the 15, it stays above it or stays below it, depending on if we're down or an upward trend. The 15-minute is good. So I hope by now everybody's put the 8, the 13, and the 48 and the 200 on their charts, right? So we're now using all this together, right? We're now building a picture, we're building a story. When we're taking a high probability setup, right? We're using a bunch of different things together to make an entry and to make an exit, right? Mostly for the entry. Bullish and bearish patterns like the bull flag, bear flag, like we saw today, we had a bull flag and we had a bunch of confluences together on that. So let me exit out of this and let's get into the charting. All right. So here we are, we have my lines. And as you can see, here's the 200, right? So this blue line is the 200 right here. And you guys can see I have the orange line. This is my 8. We have the green line. That's the 13. Right. So we have the 200, we have the 13, and then we have the 48 as the red line. Right. So here's pre-market high. Let's just chart. So I want to chart this with you guys. Here was Friday's high, which just so happens to, oh, look, what do we know? We bounced off of it, right? We bounced off of it at the open, right? So this is a good example of support resistance. If you saw me on Voice earlier today, I talked about this, guys, playing the same stock over and over again, you have your support and resistance lines already drawn, right? So you would have already drawn this. I mean, so we have this big confluence, right? That we'd head higher. Not only are we bouncing off of this 200, right? So we bounced off the 200, but we have Friday's high of the day as well, right? So that resistance is now turning into support, right? So we didn't break below the pre-market low. We didn't break below the pre-market low. We bounced off of this 200. Cool. So now that's showing us we're now in a bullish territory, right? We're now in a bullish territory. Let me just take this 8 off real quick to make it more simple for you guys. And now let's take a look. What do we see happen after we are above this 200? Well, we had the 13 cross the 48, right? We had this 13 cross the 48. Now you could have taken a trade there on that bounce, right? We could have taken a trade there, but I'm looking for something more, right? I'm looking for a little bit something more to show I am in the right trade, because this can easily reverse back down and, we would have a losing trade at that point. So I'm staying patient, right? I'm not taking a trade right at open. We had that bounce. We had the 13 and 48 cross, right? We have this pre-market high, and what happened? We broke above. We broke above this pre-market high, right? So now this is showing you that we have a high probability setup coming up, right? We have a high probability setup coming up, right? We have this confluence, and like I talked about earlier, we broke the pre-market high. So that shows us that this momentum is now trending upwards, right? We're now trending up, right? Very, very bullish. And what else did we see now? If you guys were live with us, sorry. What did we talked about? We kept talking about this flag right here, right? We kept talking about this flag, right? You guys can see it all right here, right? You see this bull flag? So again, we're above the 200, it's bullish. We're above pre-market high, right? So now we're looking for a pullback. We're looking for a pullback into the 13 first. If that breaks, we're now looking for the 48. But do you guys see, we broke the pre-market high. If we broke below the 13 and we touched that 48, what happens? We're still above that pre-market high, right? We're still above that pre-market high. So even if the 13 failed, if we bounce out the 48, we'd still be above that pre-market high, which is still giving us a high probability setup, right? It's giving us a high probability setup. So today we're watching this flag. We took QQQ and then I took SPX, but you could have taken SPY. I know some guys took SPY in the chat today on this, so we have this flag. We have the pullback to the 13, and this is where we took our entry, right? This is where we took our entry today. Boom. We had all of these confluences together, and I'll go over this one more time with you guys. 200, we're above the 200. Okay. Bullish. Perfect. We have that 1348 cross up. Cool. Two things going for us. We just broke above the pre-market high, right? Broke above the pre-market high. Boom. That is now three things going for us, right? We now have three things going for us for a high probability setup. The momentum is up. It is very bullish for the day. Now here's our fourth confluence on the day. Bull flag, right? You guys see that bull flag pulling back into the 13, right? So now we have four things showing us this is a high probability setup. So this is where we took the trade. And now this is where we're going to use the 8 EMA. So this is all on the 2-minute, guys. So we're looking for this setup on the 2-minute. This is how we take our entries. But now we're going to look at the 8. So let's take off the 13. Let's take off the 48. And you don't have to do this, but I'm just showing this so it's a lot cleaner for you guys. And we'll take off the 200. Oh, I'll leave it 200. So now let's look. We're in the trade. Okay, cool. So now we're in the trade, right? There's a bull flag right here is where we took it. So now we're in this trade. Boom. Now we're showing you the trend, right? And like I talked about earlier, here's the 5-minute. Here's the 5-minute. It broke below, right? So this was a potential for you to sell your runners, right? And now you're out of the trade and you missed that extra move up. But now let's take a look at the 15-minute and this 8 EMA. Oh, it keeps going. Boom. Look at this 15-minute. Now we're in the trade for much, much longer. And honestly, at this point, we could still hold because we bought all the way down here, right? We bought at 10, 20. So we bought all the way down here, right? We could still hold. So we didn't even come back to our entry, right? So do you guys see how in the 15-minute, it holds that trend for a lot longer, right? It helps you be in that trade for a lot longer than this 5-minute, right? So you can use the 5, you can use the 15, but the 15 minutes going to help you keep in that trade for a lot longer. So hope you guys are understanding this so far. Now we're back to the 5. So what did I want to show you guys on the 5-minute, right? So we had this nice flag out here. So we could see this was a nice resistance, right? We can even see this on the 2-minute today. So you use the 2-minute or the 5-minute to take these support, intraday support and resistances. But let's take a look here. Do you guys see how there was a lot of resistance here and we finally broke out? Well, I'm going to mark this level. So this would be the first level I marked was down here. Boom. Right? Acted as a major resistance, flagged out, we broke out. Same thing here, right? Acting like a major resistance. So what would we do here? Cool. We're going to throw up another line here. Right? And then here, a nice little bounce off of this support. And then look what happens later in the day. Look what happens later in the day. What do you know? A nice bounce to end the day, right? So this is an example of why it is important to draw your intraday support and resistances, because you can actually take trades, right, based off of these support and resistances later in the day, right? So as you guys can see here, it was a major bounce. What happens? We broke, we came back and we retested it. And again, and what else is happening here when we retested this major support? What do you know? That 200 MA is sitting right there, right? And like I said earlier, that 200 MA is super important. You get major bounces off of that 200. We did at the beginning of the day, right? At the beginning of the day, and look what happens in the day. Another major bounce for this 200 with another confluence of this major support. So I hope this little breakdown helped you guys a lot. If you have any questions, throw it in the chat.
Yeah, hey, Justin, that was really good, bro.
You like that?
No, that was good. But I got one. I want to add something to what Justin said.
Okay.
You guys ask your questions. I was typing in the chat a little bit, guys, just going over what Justin was talking about and clarifying, putting it in writing too. But the one thing that's important is identifying the trend day, right? Because once you know you're out, basically, if you're outside of the high after the first hour to an hour and a half, guys, there is a very high percentage chance we will continue to trend that way. Okay. Whatever it breaks out, whether it's high or low, it is a high probability we continue to trend that way. Right. So even on this day right here on Friday, right, that Justin was just on that chart. No, you're good. Like, granted, that was a quote unquote excuse me, choppy day, but did we just make a bunch of higher lows,
Mhm.
right? We just continued to make a bunch of higher lows there. Now that's a choppier day, and the trend was not as clear and great, but still higher lows. So we knew when we were going to break through that 408, right? Like Justin, go to the 15. Go to the 15. Okay. And then zoom. Can you just zoom out so we can see the last like few trading days? Okay. Okay,
Yeah,
look. Do you guys see how that 408 in there from February 8th and 9th was acting as a huge support, right? Or a demand zone, really? Because every time we got in there, we bounced out really nicely, right? Then when we saw, right, that all Friday we just continued to make higher lows into it and closed right at that 408 in the pre-market when we held and made a higher low, right? Then you see all these MAs. The moment we started boosting out of the trap in the morning was the tell, right? So you knew we were going to continue to trend higher from there. We basically spent all of Friday. So you want to just in the morning be like, is this going to be a trend day or is this going to be a consolidation day? Friday was the consolidation day, even though we made higher lows, but still a consolidation day. So had a higher probability we're going to have a more of a trend day up today, which we also knew what there was more than likely going into the CPI print tomorrow that today was going to be a directional move in the morning. And then what? Kind of some chop into the close. Like we stayed in that 411 to 12, 13 range for the remainder, I'd say for the last 2 hours or so, roughly. And you could have played that range, but nonetheless, it ranged, right? So that's just one thing you always want to make sure, like, are we trending? And if we're breaking out to the upside or the downside, you just want to buy the dip or sell the rip, right? You don't want to take the counter trend trade. Now, I took puts today, but I took them. Why? Because we were massively overbought, right? There was a few other indicators. We were at a supply zone. Okay. And the trade worked out, but ultimately the better R&R trade in hindsight was what? What Justin did was buy the dip, right? So yeah, I just want to add that, Justin. That was really
Yeah,
good.
absolutely.
Yeah, but you guys could even see that we had that 8 cross over the 200 at the pre-market,
Mhm.
right? We had that happen in the pre-market, and that would have been the first hint that you could have been like, okay, look, we could easily go up. And also, I mean, the 8 cross is that the 48 is the red, right?
Yeah.
Yeah, that crossed on Friday, right? So when you would have saw that cross about maybe an hour in, the 48 cross the 200 about an hour in, it would have easily, you can easily see it, right? Anyway, that was just want to add that in, Justin.
Yeah. No, absolutely. Yeah. And 408 was a major level. So we held that in the pre-market. We held that open. So that was actually another thing to look at as to, we're more than likely going to head up,
Can
right?
you put 2 charts on this, like stack the 5 on top of the 15 in the same symbol? Okay, perfect. And then yeah, do the 5 up top and then like the 15 on the bottom. And oh, that's not today. I'm like, whoa,
Sorry.
no, you're good. So there, and then we'll
Let's
go.
go.
There you go.
Yep, this is today.
That's today. So do you guys see that how important that 8 EMA is? That and it's his orange line. I talk about it all the time when we have a trend day, right? Even when we dipped below, like on that run up, when we dipped a little bit below the 8 EMA on the 5-minute, the 15 still held perfectly, right? Everybody can see that. And Justin's trying to line it up perfect. But you guys see in the morning, right? Any pullback into the 8 EMA on the 5, it was heavily above, right? It was heavily above on the 15 still, right? On the 15. Okay. So that was that's one thing, you guys, when we have a trend day, those MAs are perfect for buying whatever the trend is, either the pullback or buying the bounce and then the reject, right? So anyway, that's all I had, Justin.
Yeah, no, good. Very informative. Does anybody have any questions so far?
And last thing, obviously, using the MAs on range days, right? On range days, they don't work as well. You see the range
Mhm.
day here on Friday, right? It's crossing over a ton. right? It's crossing over a 10. That's not when you would, that's not when the strategy would be the strongest,
Exactly. Yeah,
right?
actually that's a good addition is
Yeah.
that when we're on these range days,
Mm-hmm.
MAs aren't really your best friend, right?
No.
You're gonna have to play more, you know,
You got to play
double
the high and the low.
tops.
Yeah,
Yeah,
play the high. So
exactly.
you take the opening range low and the opening range high. You could see them there. If you would have put two lines, you would have bought the dip at the low, right? At the low of the day in the cash, right? You see it right there. Came down, bounced. Okay. And then if you would have played the high, you came up there, right? You could have played it twice. Okay. So that's when you get into a range that you want to just establish what's the range and then play that, right? Because you notice there were no new highs made within the first hour and a half of the market. You guys see that?
Mhm.
No new highs, no new lows made, which kind of gave us the hint. All right, look, we're going to range. And that made sense. Why? Because we fell out of the sky the day before, too, right? So, yep.
Yeah, absolutely.
No, this was good. Good. I thought it was a good presentation. I thought it was very clean. It doesn't look like any questions. I don't see any in the chat right now, but
And then let's just go for this day. Let's go for the opposite, right? So we could go look at this day real quick. Right. So same thing. Let's take the 8 off real quick to make it a little bit cleaner for you guys. Right. So we open up in the day. We open up to the day. Let's remove this. All right. So we had the pre-market low. Boom. We gapped up. Pre-market low. Boom. So now we're not taking a trade right at open, right? We're waiting. We're waiting. Okay. Now we're heading below the pre-market low. And what happens here, right? So we had the 13 cross the 48. And we're waiting, we're waiting. We finally break below the pre-market low. And what's happening here? Here's the 200. How do you know if it is a range? I mean, you don't necessarily know if you guys can. I mean, if you take a look here, you could see that we're trending down, right? So you don't just know if it's going to be a trend day or not. But obviously, if you're waiting until like way into the afternoon, yeah, of course you missed it, right? Of course you missed it. But you can kind of tell if we're going to be rangy or not. This is a good strategy to use because it will show you more, okay, it's going to be a trend day, right? The EMAs, right? The 13 to 48 are pulling away from the 200, right? So you have the 200 and we have the 1348 more pulled away on a range day. Those EMAs are going to be more bunched together, right? It's just going to be kind of like a big bunch. But when it's a trend day, you could see that the MAs start to pull away, right?
they start to stack. It's called they're stacking. They're stacking below each other or stacking on top of each other, right? And there's a clear trend down. But even in this trade here, right, when because you're like, is it by a certain time? Is it this? The pre-market low was broken, right? And the cash low was broken within the first hour and a half. Okay. And then that first retest that you see where we actually bounced, right? Where we bounced and came back up and rejected the green and the red and continue to go down. That would have been your cue to know we're going to continue down today.
Mm-hmm.
We're going to continue down.
So,
Why? Because we got underneath, right? We got underneath that 414, 415, right? So what was the next level down then? Right? We had 410, 408, really. And we made it all the way down there. We ended up making it all and then a little further. Right.
and even if it doesn't, and even so say a day like this, say it came back and ranged, right? We take that trade here. That's what 413 and say even from that drop
You're
is
dropping two.
411.50. Yeah.
Yeah. That's a buck
Almost
50.
2 points. Yeah.
Yeah.
But that's going to be a nice trade.
Yep.
Either way, right?
Mm-hmm.
It's going to be a nice trade either way.
Mm-hmm.
Pre-market low does not include after hours, high or low. It can, right? It can, but not always, right? So I would definitely still draw it. I'd definitely still draw the after hours,
Mm-hmm.
right? So if we take a look here, here'd be the after hours, right? But you would probably draw the low of the day before here, right? And you could also draw the after hours. The low of after hour. Oh my
Ugh.
gosh. Sorry.
Ugh.
So yeah, still important to draw it, right? So important to draw because we could see that was a major reject there as well, right? So we'd have the after hours, and then we would have that reject off of the 48, which was our last line of defense. We're
Mhm.
below that 200, so we're definitely in a bearish trend, right? So yeah, still draw the after hours.
The after hours are good. I think the pre-market is most important in my opinion.
Yes.
The pre-market is more important. It's good to just know, look, there was buyers and sellers, but the after hour volume, because it doesn't trade for a long time, there's not a lot of people, there's not a lot of volume there. It's that pre-market where you get the pre-market traders where volume is a lot more, although it's not a lot, but it is a lot more. It's good to have both, but if I had to choose one over the other, I definitely would think that the pre-market is most important.
Yeah.
Well,
But definitely, so sorry, that the example that we just looked at, there was a gap up. So let's just look at a day where there wasn't a gap up, which is the day before. So we look at the after hours, you could still draw the after hours high, right? And that still was pretty important. So we could still draw the after hours high. And then this would be the pre-market high would essentially be right here. But you could see how that pre-market high, right? Okay, yeah. Pre-market high
it's gonna
was
be
a
right
little
there.
bit.
Yep. Yeah, yeah. That's
Okay.
it. But that candle, yeah, I know you see it.
Yep. Right here. Boom.
So
You see how
real
that
quick,
was small.
while you do that, Justin, someone asked, they said, how long do you have trend lines on your charts? Well, trend lines are price levels because those are two different things. A trend line, if it has significant touches on it, you want to keep it. But the price levels, for me, you always want to keep your price levels most up to date. Most up to date. So if there's a significant level from today and yesterday, you'll want to keep that. If a new level has appeared today, right, you'll want to make sure that that has significance. Just like how supply and demand can get eaten up and no longer become supply and demand from the past, you always want to update your charts, right? That's why it's so important to every day, previous day high and low, pre-market high and low, right? Of that day, of the most current trading session, right? It'd be like you don't want to go scout a team like in sports from last season. Like they've got different plays, they have new players, all this kind of. You want to kick the most relevant, the most recent info. Okay. In our case, the most recent info is the last time that price was traded, right? The most recent price was traded. That's what you want to keep in mind. Okay. Pre-market versus after hours. After hours, Big Kev trades after the market closes. Okay, so it closes at 4 p.m. Eastern Standard Time. It trades from then, and it will trade until 8 p.m. Eastern Standard Time. So it'll trade for 4 hours after market. If you're on the West Coast and you're trading Pacific Standard, we're done at 1 p.m. It will trade until 5 p.m. Okay. Then pre-market starts depending on your broker. I think TOS, Justin, is the earliest pre-market, right?
I believe so, yeah.
I think it starts, and it's usually at like
It's
1 a.m.
it's 1 my time. Yeah. So I think it's 1 a.m. my time.
No, it's
2 a.m.
it's
my
it's
time.
2 a.m. your time, 1 a.m. my time.
Yeah.
So 3
Yeah. So 1
4
a.m.
a.m. 4
PST.
a.m. Eastern Standard Time. Yeah, okay.
Yeah.
Yeah,
Yeah.
there you go. 4 a.m. Eastern Standard Time.
Mhm.
For ESF futures, nothing to change. So ESF futures is different. It trades 23 hours, 5 days a week. Starts Sunday at 6 p.m. Eastern Standard Time. Okay. And then it'll trade until Monday at 5 p.m. Pacific Standard Time, and it'll close until 6 p.m. It'll only close for 1 hour, and then it'll start trading, right? So think it trades for 23 hours a day. Yep. Good question.
For pre-market, what time frame for the pre-market and aftermarket? You could use the 2-minute technically, since we're trying to take our entries on the 2-minute, but you could also look at the 5 or the 10-minute to draw those lines, right?
Yeah.
So it doesn't matter if you're on the 2-minute or the 10-minute, right? the pre-market high is still going to be the pre-market high. A pre-market low is still going to be the pre-market low, right? Likewise with the after hours. So it doesn't matter if you're on the 2 or the 10. I really want to go above the 15. But it's still the same thing, right? It's still going to be the high and the low. It's not going to, nothing's going to change with that. But great question.
Yeah, good question.
There's anything else.
I
And
don't
like,
think there's anything
and
else
then
so
throughout the
far.
week. So of course, the strategy is good for trend days. Having that intraday support and resistance, like we said, the high of the day, the low of the day, when we're in range days, right, are going to be a little bit better. And those are also the days where you can start to use more of like the candlestick reversal patterns, right? And understanding those and the price action a little bit better versus using the MAs, right? So the MAs are really, really good for trend days, right? They're absolutely awesome for trend days. So it's on the 5-minute. So I wait for the buy or sell signal on, so wait for the buy signal on the 2-minute. So I'm using the 2-minute to make my entry. And then, especially to find that trend, I am switching to the 5 and then the 15, looking at that 8 EMA. You could use the 9 if you want for that trend. So entry is on the 2-minute, entries on the 2-minute, and then the 5 or the 15 is going to be where we just follow the trend. I know some people like the 3-minute. You could use the 3-minute. I would not, for this one, I would not use the 1. I would use the 2-minute. The 2-minute or the 3-minute. I like the 2-minute is even. The 3-minute, those candles can be a little bit more odd. It's an odd number. I don't really like the 3-minute. I like the 2 a little bit better, but. And I know the 1-minute, so we could take a look at the 1-minute. Why not? Let's take a look at the 1-minute and see how it plays out.
If you're gonna trade the 1-minute, guys, just know it will have way, like, make sure you zoom out a little bit, because if you're too zoomed in, it'll get you very emotional, because it like a dip looks like a crater, right? Yeah,
Mhm.
K-Stack says it. The 1 minute's too noisy, like noisy. Yes. It looks like you're gonna fall out of the sky or you're ripping up, right? So just know that it's very, I call it the heart attack chart. It looks like you're going insane. So just know that if you're gonna put it on the 1 minute, just know, right, that it's gonna appear way more volatile than it probably is.
Let's take a look at today, for example, with that bull flag, right? It broke that 13. It broke that 13. When we look at the 2-minute, look at that 2-minute, we bounced right off of it, right? Had a nice bounce. And let's take a look what it looks like on the 3-minute. Okay, cool. It's so weird that it does that. I mean, the 3-minute's good too. So if we take a look at the 3-minute, yeah. So we could do the 2 or the 3, right? The 2 or the 3, pull back into that 13, boom. Right. So I'd say you use a 2 or the 3, don't use the 1. Unless you have a high success rate and you use the 1-minute, by all means go ahead. But for this example, use a 2 or the 3.
Yep. Jared asked a good question. He's talking about levels on a day like um
When was last CPI? What was, do you know that date?
shit.
Can anybody
Um,
find that real quick? What the,
I could probably find it on. I'm just looking at
and
the
then we
chart.
could just go look at it real quick.
Just looking at the chart, I'll probably know. It is not POW day. Shit. What was it?
112. Yeah, it looks like it.
Yeah. So yeah, that 112, it has like a hammer. Oh,
Yeah.
if you're on the daily. Yeah, if you're on the
Let's
daily.
go to,
But it pretty much held the previous day low for the most part.
it's not going to. You slow down. Yeah, it's gonna take me a while to get there.
For
But
days like tomorrow, well, I touched on it in my video that I just posted for the homework. Tomorrow, the levels you want to be looking for when we're anticipating a massive move, like on the CPI where it happens in the pre-market, we're typically going to move to a major level, whether it's a resistance or supply above, or it's a support or demand below, right? Like what would be the major level we would move to tomorrow to the upside? Would be that 420, right? Just about 418 to 420,
yep,
right?
or 1850.
And that downside level that would most likely move to is where, right? 402. That's the PAL. That's the PAL imbalance down there. That's the day PAL spoke. Okay. So 402. And then what's the level below that is that huge dip buy off that what? That green line is that the 13?
Yep.
That's the 13 right off that. So that's
But then we
4.
have the 200 here,
And then
right?
right off the 200 as well. So that 400 is where I think that low is on the green dot. Up a little more. Yeah.
Yeah, it's
398, 398, 400. Yep.
398. Yep. Would you recommend waiting until things cool down after CPI?
Absolutely.
Mm-hmm.
Absolutely. Hold on, I was gonna put this. Yeah, I would not trade yeah, you're gonna want to let it trade and probably wait until the cash open. If I know you trade futures too, you're trading MES, but yeah, you want the market to show itself, right? You want to show, let it go get its pre-market high. Let it go touch it twice, maybe. Let the cash open. Let the cash open take it up, right? Yeah, don't get whipsawed. That's the yeah. I tried to play when I was started out trying to get funded. I blew a bunch of accounts just playing I think it was it was one of the pre-market. If it wasn't, it might have been the CPI data, or I was playing a Friday data, which is probably a non-farm payroll data. One of the two, right? Because it moves so fast. Yep. 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 It's better to not. It's like, think of these data releases like playing a earnings. It's a gamble. Just let the market get to your levels and let it come into your bid. Okay. So if you're waiting at a support or demand, let the market come into your bid. Don't go chasing it, right? Let it come into your ask if you're waiting at the upside to short. Okay. That's the best way to play. Honestly, just play the market every day, but especially these data releases. Don't go chasing it. Don't go chasing it.
And it's cool. If there's a big move, cool. Guarantee there's going to be the opposite of that move, like more than likely at some point in the day, right? We could take a bounce if we had it up, or we could take a reject. If we had it up, we could take a bounce if we had it down, right? So we could take the opposite of that move at some point in the day, right?
Yep.
So if you guys saw me, me from before, I used to take trades right at open. Now I'm just chilling. Now I'm relaxing, right? I'm relaxing it and let the, you know, market show itself and then take a trade. And just like today, we hit 100% and I didn't take a trade right at open, right? I didn't take that trade right at open, right when the 13 crossed, right? I didn't take this trade. I could have taken the pullback, but I waited until we flagged out and then I took the trade, right? So I waited until we were above pre-market high. And then I took the trade because how many times, we could have taken this trade on this, pullback here, and then we just dump, right? That's happened a lot of times. So plenty of opportunity throughout the day to take a trade. Don't need to rush into a trade right at open.
Absolutely. Yep.
Any more questions? If you guys like this, shout me out on Twitter. Let me know how you liked it.
Yep.
But if not, I will leave you guys.
We'll end it so we can get this thing uploaded because it's going to take a minute.
Yeah.
just how long it took me to put my homework up. I know this one's going to take a while.
But I really appreciate you guys for coming out.
Yep.
I think, okay, so we're going to move masterclass to Thursday, correct?
Yeah, please.
Okay.
That would be best for me.
Masterclass is going to be moved to Thursday. We're going to move book club to Wednesday. So book club will be on Wednesday. Masterclass will now be on Thursday. So little switch up this week, but we're still going to do both, right?
Sweet.
All right. So come ready tomorrow. Positive mindset. We're gonna kill it. One trade. Don't overtrade. Uh, be patient, and we'll kill it tomorrow. All
And
right.
don't do anything stupid. That's right, yoga girl.
Yeah.
That's right. That's
All
right.
right,
All right.
Wolves. Appreciate you guys.
Thanks, Justin.
We'll see you guys
See you
later.
guys tomorrow. Peace.